Mercedes a good team.
All right, ladies and gentlemen, welcome back. Another episode of Chart Talk coming at you every week. Let's jump right into the market outlook. So we got some great information out of the market last Monday, and ever since then we've been on this relentless run. So, this was a Friday here, this sell-off, and then the following Monday we were wondering, are we going to push lower, or are we going to pivot here at this important trend line support? And we pivoted, and now it's 1, 2, 3, 4, 5, 6, 7 straight days where we've moved higher in the indices. So, that's got to worry you a little bit in the short term, but in the long term, the trend is your friend. It's clearly the bull market's still well intact. That's really all you can really say about it. What are you thinking?
I definitely agree. I think the main thing is that pivot you mentioned in the SPY 367. That's the clear kind of line in the sand right now. Above that, stay risk on. Below 367, probably a time to take some risk off. With that, Jake, let's jump into some of the top ideas. First one, we got RIDE, R-I-D-E.
Yeah, I'm big in this one. This is like the one thing that hasn't gone for me yet. So take that information as you will. But I love this setup. Electric vehicle name, super hot. And we saw, I keep mentioning, this workhorse had a very similar pattern. And then look what it did, a huge breakout. And that's what we're looking for in this ride. So looks pretty good.
All right, next we have NVTA through this 55.
There was a trade alert this morning through 52. So, the 52 buy where you can give it the proper amount of room that we alerted this morning. I think that's a much better buy. It's got earnings coming up though, February 17th. But yeah, through 55 looks like it gets going.
All right, next is NIO.
Yeah, this is one of my. This is my biggest holding right now. This just went today. You have to be in it today.
All right, next we have this JKS.
God, fucking going through my portfolio. I'm in this one too. Just against this pivot area. Where do they like it?
For JKS, that was up through 68.
Yeah. So, we're looking for a nice close out of that one today. Hopefully, it keeps giving us these little fake out moves. But yeah, it looks really good.
All right, next is recent IPO, CMPS, up through 48.
Compass?
Yes.
Yeah, this looks good. I'm waiting on this one too. This is the Magic Mushroom stock. So just waiting on this one to come back. Looks like it needs a little setting up. But yeah, through that 48 in time, looks really good.
All right, and we got two more. Next one's Tesla, this 880.
Tesla 880?
Mm-hmm.
Get the fuck out of here.
Get the fuck out of here.
Oh, I'm sorry.
No. Tesla's gone. You missed it. No more buying Tesla.
All right, and then last up, Nicholas is looking at Amazon. He's looking to buy up through this 33.50 area. Yeah,
I'm waiting on this one too. 33.50, 33.80. It's this area. It's really 3400, and then the earnings high is 34.34. The trigger for the trade is that 34.34. Once it breaks that area, should be off to the races. Don't want to over-focus on it while it's shopping around right now, waiting to see some volume, but definitely watching.
Gotcha. All right. So we have a couple questions throughout the program that we get from some members. We'll run through those really quick. The first one, Shake, is how to spot a bull flag. Kind of the easiest way. Maybe you can explain how to spot one.
How to spot a bull flag. You want a name. Let's go to this NIO since it's my biggest holding. You want a name that's top right because it shows demand. Very simply, top right charts, people are buying them. Bottom right charts, people are not buying them. It's very simple. So you want to see a name that's advanced and now has going sideways and now is looking for the next advancement. And this, this NIO is just a perfect example where, we're buying the 62 area and it looks like it's ready for the next leg higher, or 61 area. But
all right, Jake. So the next question we had was how to spot, good volume in a stock.
All right. So I'm going to go to this AI, for example. And it's so much more simple than people want to make it. So you look at this NI, you can see that on my chart, right? This AI.
Mm-hmm.
You see how it opens, and you look at this fucking massive volume off the open. Just comparing to yesterday, that is just like that simple. These fucking massive bars versus look at this dormant. The stock was pretty dormant, right? Not doing much. Then we look at the volume today, February 9th, and that's what made me buy the shit out of this today, because it showed me something has changed. So when you can see that something has changed very clearly, that's what I want to see in an uptick in volume. It's easier with these names that do, only a couple million a day versus the Facebooks that do 30, 40 million. It's tough to see that. That's why I gravitate towards these recent IPOs. But honestly, It's as simple as looking at these bars versus yesterday. Yes, I'm gonna do some math like 30 minutes in, compare it to the previous day and stuff like that. But overall, it's just a pictorial representation right here. This huge volume on the intraday, and compare it to yesterday's. It's honestly that simple.
I love it. All right, lastly for you, Shake, what is a feeler?
A feeler is just I want to keep my eye on the stock, but it hasn't shown me enough to gain a full position. Mm-hmm. So it's just like an entry position. So I'm always keeping my name on my eyes on the stock. It doesn't have to be big. It could be one share. There are rumors that Stevie Cohen takes one share feelers. I'm not sure how true it is, but that's what I heard. And it's just so you keep your name on the stock, and then you'll realize once you have one share of a stock, you're going to watch it so much more, and you're going to gain so much information on it. Like that AI, I traded the last 3 days, but today I put the most risk on because I had so much information on it from this week and last week. So that's the power of a feeler right there. You're just gaining more information on a stock. You want to see how it trades, and then it's going to lead to your ads and your entries, your big entries.
Perfect. All right, Chick. So you're off the hook for the next 2 questions. I'll take these next 2. First one was order types. So we're going to run through, a few of the most common market order, market buy or sell. It's going to be an order that you put in, and you will get the best available price at that moment. If you want to sell AI right now, it's going to sell it. Limit buy, it's going to be a below the market order. AI is at 170, you're putting a limit buy to buy it lower than where it's trading currently. Say, for example, 160. Again, this really isn't an order that we ever use because we don't really buy on the way down. A limit sell is an above the market order. So you have AI, you want to sell it at its prior all-time high at 183. You put a limit sell order in 182.89, and you're looking to sell above the market. The orders that we use the most are buy and sell stop. Those are orders that will trigger at a certain price. So in this AI, if Shake didn't market buy in and he wanted to buy up through 155 when it was at 150, he would put a market buy in at 155.05. When it trades above that, that would become a market order, and he would get automatically filled as it's going through that price. Same thing with a sell stop. If he's in AI through 155 and his stop is 150, he could put in a market sell stop 149.89. And if AI was to fail, it will automatically trigger that sell position to get him out of the trade without him having to click any buttons. There's also buy stop limit and sell stop limit. For buy stop limit, the only time that we ever really use them is around earnings season. So say AI was going to set up for a move and we were anticipating a breakout through 185, we can set up a buy stop limit to buy us up through that level. But if AI had blowout earnings and it opened at 200, the order wouldn't fill for us. Very rarely do we ever use those. For sell stop limit, I can't think of a time I would ever use sell stop limit. Shake, I don't know about you. That's also an order that you're really never going to want to use, especially when you're
I would never in my life use. Oh my god,
yeah,
I don't know why that order exists.
Neither do I. I mean, the only thing I think of is if you wanted to short through a level and not really watch it.
Oh,
which
okay, yeah,
that's the
same thing for earnings kind of thing.
Super rare occasion, and honestly, if you're asking what a sell stop limit order is or how to use it, it's probably above your pay grade at that time. So our big thing is we use market buy, market sell, limit sell orders to sell into, retest, things like that. And then the bread and butter is the buy and sell stops to, get us into trades and get us trades. That kind of helps remove the emotions. So those are the major order types. Second question is, what's the wealth tracker? Shake, if you can pull up the email and just pull up that little graph really quick.
Yeah, one
and
sec.
I'll go over that. For the members, we have what it's called our monthly goal setting folder. Every member has their own. The ones who do it, not everyone does it. So there's 2. There's one for your trading journal where you journal all of your trades. Shake will journal AI, how he bought it, how he sold it, what he did well, what he did wrong, how could he improve, etc. Doing this monthly and kind of looking back at the trades you made, you can spot a lot of those mistakes and kind of avoid them moving forward. The second part of that is our net worth tracker, which is this Excel sheet here. You track all of your assets, all your liabilities, and it shows you in real time, where your current net worth is. So if you want to track your taxable account, your retirement account, your 401k, your saving, your home, your mortgage, credit card debt, etc., you can list everything here. And as the months progress, you can see how your net worth increases and decreases. This is a very simple tool for most people. Again, as you start to keep track of these numbers, most people assume the net worth is much higher than it is. Once you start to put it on a pen and paper, it becomes a little bit easier to track. And most members that do this, we tend to see those numbers increase over the months because they're just keeping a more conscious eye on it. So that's the wealth tracker. that's the end of the questions for this Chart Talk Shake. If you want, we can jump into some of the good and bad trades. First one is Mustafa. If you just hit the next image over, that'll pull up his crazy trade in this API.
Oh, he caught this API? God, it's so sick.
Yeah. So he's actually fully out of this trade. I was talking about this. So very briefly, again, like how Shake was drawing out the flag earlier in NIO, Mustafa drew up kind of a bigger flag in this API. He bought up as it broke, up through 45. His first kick was at 71, 80% of his position, and he simply just trailed by the low of day for his remaining 20%. And as of yesterday, his stop was below 96. He just kept trailing it. Today, it dropped below that, and he got out. He made not 100%, but just about 100% in that last ad. So, phenomenal trade, very easy trade, 1 buy, 2 sells. Made 30, 40% on the first trade, almost 80 to 90% on his second sell. Very simple trade, nothing too crazy. Next one is Tom Van Meter. This is kind of a bad trade in his AZN. I was talking with him as well about this, and this was, again, when we kind of break away from the things that we do. A big thing for what we do at Trading Experts is we focus on simple game planning, buying through a level, having a hard out, and aiming for 5-to-1 risk reward or greater. This was a trade where kind of Tom diverted from that simple strategy, and he took it kind of on the vaccine news, and he was expecting kind of this bigger pop, and now he's kind of stuck in it. And, we all get kind of trapped in winners. This happens from time to time, and it's just why we want to always focus on just keeping it simple and respecting your price. He'll be able to potentially get out of this, break even, maybe make some money, but the next thing is earnings coming up very soon. And if it gaps down, he's going to kind of be trapped in it for at least a quarter or two. If it gaps up above his price, that's typically a time that people would want to sell it. That's really the time he's going to have to hold. So having this conversation with Tom, he's kind of marrying this name for at least the next quarter or two, for better or for worse, unless he wants to just kind of arbitrarily take the loss. And these happen from time to time. I've been trapped in winners. Even GWPH was one I was trapped in that I got very lucky with that buyout recently. And I just had to sit with it until, I kind of got lucky with it. So that was his bad trade. And
let me chime in 1 sec. And I'm seeing this so much more, not at Tom or like him specifically, just in general, because the market's so sick right now. We're seeing people just develop really bad habits. Like AstraZeneca, it was just like a news trade, no really game plan. You just expected it to pop. Everything's popping with COVID, so it's like, all right, let me just throw some risk on, and it's going to work out. And we're seeing more and more of that activity as this market gets more inflated. This is like the sickest market I've seen, don't get me wrong, but you don't want to lose the fundamentals. And, this trade is completely losing the fundamentals. No stop or moving your stop, no real game plan. Now his game plan is planned to hold through the ups and downs of COVID. That's not a good game plan. He knows that. But, and not just Tom, not to, single him out or anything, but we're just seeing this more and more. And I just want people to fucking, realize, 1, this isn't a normal market, and 2, don't have your fundamentals slip because it's a good market,
100%. And that was
simple as that.
And even when I think of like the newer trader, it's like this tends to be 9 out of 10 trades, but this is the end result. It's just kind of arbitrary. You don't know what you're doing. Where like for Tom, this is like a very selected situation where maybe out of 50 trades, this was the one. So again, not the best trade. He'll work out of it, but at least it's the small percentage versus the whole lot of those trades.
Right.
So Shake, if you want to go over any of your good or bad trades for the week, and then I'll have my 2 quick ones, and then
I'll start with the bad one. Oh man, this was a killer. All right, so this thing is going crazy, right? So I bought this 103 with a 99.50 stop, and in the last chart talk we talked about it, February 1st, and I had this 99.50 stop. And Friday I'm on the mountain, so I moved my stop up to from 99.49 to break even 103, and you could see I just got ticked out, and it looks like they're very small moves on a chart. This is the high is 120 here, the low is 100. That's a 20% move real quick. So I got shaken out of this stock, and then the next 2 days it just explodes. So that was a mistake on my part, moving my stop up. But again, it was Friday. I was on the mountain. If this closes below 103, I'm not going to want to hold on to that stock anyway, which I think it might have. So I just took my eye off of it this week. That's okay to me. This NIO is the best trade I got going on in the active account. So here's how I traded it. So we could see it turning this previous resistance level into new support. I bought this area, this 57, 58 area a few days ago. I tried to add the following day, this was last Thursday, on momentum and quickly got out of that stock. I'll go to the 30-minute here. So I want to see this 58, 59 area break. I bought some more for the momentum, quickly got out of that stock, but kept my entire core down to this stop area. And then it closed the week very weak last week. I was wondering if it was going to fail, blah, blah, blah. Opens the week very strong. I added some stock back. And then today I added on the momentum with the trigger, that 59.50 area. And now I just have a massive position. Average price 58. Looks amazing. This thing looks like it's going straight to 68. That's really good. And then my buddy Knox. Woo, sometimes you get a little lucky. I rebought this thing today at 69 in my long-term account. I don't know if there was news on it or whatever. They had a secondary offering today, and so it gapped down. So then when secondary offerings get bought up, not normally, but in this market, it's bullish because we're just seeing such sickness in the market. Like, the stock is a secondary offering and it's fucking up 10, 20%. Mm-hmm. Like that shouldn't happen in a normal market. But because of this market, I added 69 just with the stop here at these lows, and it's already up 10, 15% or so. What else? Oh, and that AI today. So I'll talk about this AI a little bit because I had to trade it as a very short-term trade because I was looking at this one today coming into the day. I wanted to buy the inside day high, which was 152. But it gaps up and it opens at 152, and it just sets up an intraday flag through this 155, 154.50 area. So I have two choices on this trade, and this is what shapes my goals for the trade. Either I buy that 155 and I give it to yesterday's low at 146, which is $9 risk, or I take it as a day trade, which I did because I saw the volume as we spoke about, and I'm only giving it $2.50. I bought 154 and I'm giving it to 152. So now remember, or sell stop 152.50. So now remember, I wanted to buy 152 today, and now my sell stop to tell me I'm wrong is 152. So I know that I don't have the proper stop. So this is a day trade for me. So I want to kick this into strength. I still have 20% of my position or so, but I had to take off a lot of the stock into the pop because I didn't have the right stop. And it all comes with your time frame of the trade. So it's like AI, really small time frame, kicking most of that stock, same day. Knox, really long time frame. I'm not even thinking about kicking this one yet. Mm-hmm. So, knowing your time frame is really the key to success in trading, or one of the big ones. So that's all I got for you.
All right. So again, we talked a little about bull flags. This is kind of a textbook one where if we're looking at that 2130, 2150 area, basically that green circle, we can see how it's been running into that area. So we always look for the third or fourth attempt up through that flag to buy through. This is one where I bought up through that 2150 breakout of that bull flag, but it had earnings coming up. This was a trade I just simply moved to break-even stop. I lost nothing in it, but this is kind of just a simple example of a bull flag we look for, a trade that didn't work, and we just got out before earnings, lost nothing in it. And then the second trade, kind of going along with the lesson with Tom Van Meter of getting trapped in a winner. Shake, if you want to move over one, this is GWPH. This was one similar to Tom's trade where, I initially bought, I forgot about the earnings that were coming up. This was, back in, July. Earnings came out, it gapped down, and I got trapped in GWPH. We talk about getting trapped in a winner. It's a $100 stock. This isn't getting trapped in, a $5 name. So I got stuck in this for a while, and I had to work my way out of this position, which took, the better part of a year. And this is the lessons that most people don't want to know. Like for Tom, it's realistically, he's going to be in that name for 3, 6 months, 8 months, a year to work out of that one simple mistake when you kind of get trapped. And that's honestly what happens in most of these trades. And GWP was a perfect example. I got trapped in it. I found a couple of spots to kind of add up and kind of improve the cost basis of that position. And then I almost sold it the beginning of February as it started to break out into 160. I had actually a limit sell order at 165. I think the high was like 162, so I never got taken out. I canceled the order as it pulled back in because, again, if that chart's running back up to 162 this second time or third time, it's more than likely going to go higher. So I didn't have the order in, and then the buyout got announced. And this is kind of a perfect example of when people hear about buyouts, they don't know what to do. When you hear buyout in the name, usually it's a very lucky trade. You and I did not know GWP was going to get bought out. They gap up, you take the win, and you can see over the last week, it still hasn't really moved after that announcement. So it was much easier just to take the profit on that first day on that gap up, take the money and run and move elsewhere. So those were my two main lessons for the week. And Shake, last but not least, we have Book of the Week. Again, this is like 4 days after the last Shark Talk, so unfortunately I can't read a book that fast. I'm still on Atomic Habits. Definitely recommend it. I think for some of the members, if anyone's interested, just shoot me a DM, and we'll just start sending out, for some of the members who want it, the best book we like each month, to kind of help some of the members out who consistently asks us what to read, we'll just start sending them out. So with that, Shake, I think we're done with this chart talk. All right, guys, we'll see you next week.